Hello, Warriors. Who's ready to have a good week? There are a few cherry bombs and M80s going off this week. So we're going to have lots of reactions to trade. I'm ready. How are you, George? Glad to be here. Looking forward to talking to you. Sinatra, Mike, Hiya Blake, AJ, KMan, Glenn. Everyone okay? All right, let's go to work. So gold was a great sell last night. Did it? Booked part. I'm pretty bearish gold here. Looking for stop hunts and liquidation under 2380. We held it last week. Tried to bounce. This will be your tell under this 2360 level. Plus, silver's a little stronger than gold. It's the first time in a while, but I think we're going to have a chance to buy the breakout. It should either hold above it. I don't know if it's going to be that convenient right at the breakout at 26. Maybe we go 25 and a half or so. But this looks viable now. Okay, so be patient. There are going to be good buying opportunities. I'm just taking a shot here in the gold because I think there's a lot of people. You can't find a gold bear. All right, so they'll be down here. They'll be talking about 2100 gold, and who knows what they'll be talking about in silver when we're here. Maybe a failure to go to 18. And also, what's going on? I want to share the gold silver ratio with you because of the correlation that we have with the dollar. It's had one heck of a rally. Okay, really big rally with silver getting smashed, underperforming, but it might be running out of juice here. And with this correlating to the dollar rally, look how much weaker it's been. Okay, you could barely compare it. So you have this, and then you have this. So I still think the dollar is going to attack the levels I've been talking about for a while up here. Around 104.90, 105.20 is the area where I'll be looking to sell it. And just quickly, hoping that we get a more than a rally than we've had so far, especially in NASDAQ. I'll be looking to trade retraces if any of these news events take us up to the fibs. So halfway is 1970 and 61.8 is about 20,000. I'll be probing it and put out my short positions again. Should that happen, and I want to ask KMan, with all the big news that we have coming, all the central bank stuff, BOJ, Fed,
Mhm.
BOE. We also have month end, right?
Absolutely. Good morning, Dale. Good morning,
Good
everybody.
morning. Good morning.
Everybody had a nice weekend, very relaxing weekend, and
Yeah.
a relaxing perhaps Monday, but it's already starting to boil a little bit in the markets. Trading date, value date, end of month today.
Okay.
We have seen a bit of dollar buying on the one hand, for sure, but we may have a little more to do going into the London fixings. But then, yeah, the rest of the week will be big central bank week, more end of month. Although I must say that pure end of month flows, taking away what the European asset managers have been doing this morning and those US corporates, it's very undecided because if you look at the S&P, for instance, we are give and take a few pips, just bang back on the 1st of July level. And so I don't think there is going to be tons to do on the end of month in the dollar. That is what I think. But other currencies may move around a little bit. And then, of course, we don't only have the central banks, we do have US jobs reports as
Yep.
well. So it's going to be a really, really busy week.
Yes. Um, Narrative or things that you thought about over the weekend that you
Yeah.
would like with the opportunity say, for example, some of these news events. And one thing I left out is we have the announcement of the refunding package.
Absolutely as well. That adds to the fun on on Wednesday.
Yeah. So, I suspect they'll go heavier in the front end because, they're more able to control that and probably want to help, long rates not go up with more supply. They're having a great day. We're breaking down.
Hmm.
If I finally think we'll get that 420 close in the 10-year. Look at that. We
Yep.
gap lower.
Hmm. Yeah, yeah. The theme of the morning as well is lower global yields. Because as you know, I'm always keeping an eye on the differentials as well, and the differentials have barely moved. And actually, if you look at, because everybody is always talking about the US yields, but if you look at the differentials, European and UK yields, for instance, have gone down faster than the US actually. Well, marginally, but still there is. So it's a global yield environment that sees a setback lower. Um, Potentially as well with the Bank of England coming up. FOMC likely on hold, but firmly, I would say, signaling September. Well, the surprise would be that they cut now, but I'm not sure that after that GDP last week that they will be feeling to cut right now. But yeah, the global yield environment is coming down a bit, and that's interesting as well ahead of the Bank of Japan. I guess we'll talk more about the Bank of Japan tomorrow, but look at what happened the past week and a half, the get me out of everything move, because the yen has influenced everything, including equity markets like S&P and stuff, and it has therefore the potential to create another move in the whole market. What the Bank of Japan is going to come up with.
Okay.
Yeah,
Uh,
because even the Nasdaq and stuff, they were used as for as long as the yen was weakening, they were used as the easy hedges, the yen versus tech versus S&P versus equity markets, used as the kind of easy hedge. That's been taken off. But at the same time, positions are much lighter now than what they were 2 weeks ago, because we have seen a lot of yen unwind over the past week and a half, 2 weeks. So yeah, the Bank of Japan could actually make everything move again.
well, look, it recovered from that 52 area, had a decent bounce, nothing much compared to the
Mm.
decline. Do you think there's more upside left here in US dollar yen?
Well,
Uh,
um, it's really a dime on its side, Dale. And I think they will do something, but then it all depends on how much. I mean, for the yen to materially strengthen from here, I think they will have to uh, cut a fair chunk of their bond buying. That is, at least bring it down to 4 trillion per month, and do at least 10, if not 15 BPs. If the market sees only 10 BPs and scaling down the bond program to 5 trillion yen a month, I have a bit of a feeling that we may have a post Bank of Japan reaction that we have seen after the other ones, because of the positions being lighter. Now, if they go full steam and they cut, let's say, bond buying by half to cut it down to 3 trillion and raise the interest rates by 15 BPs, that would send a very strong signal. But there's already people talking about that there's a bit of political pressure not to raise rates, and that would be a shocker, I think, if the market sees that. And then I'm not saying that we're going to trade back at 160 straight away, but 155 will be toast, and we're probably going to go back to 158 or so.
yeah, that's the way the charts look. Yeah,
Yeah. But
that'd
if
be
they
about
really
halfway.
go,
That'd be about 61 back. We went
hmm,
from 62 to 52, halfway back
yeah.
57.
And if they underwhelm, keep an eye on what's happening in those equity markets. You know, thinking about S&P Tech, they could go on a flyer. They could really
Yeah, I mean,
go much
as
higher
they're
again.
shaking out, if you just want to use arithmetic. I know a lot of people have 6,000 targets in mind for S&Ps, so it doesn't take that much imagination to say if this is a low and this was a high at
Yeah.
680.
Yeah.
So 280 is going to give
Mm.
you 960 if you tack this decline
Mm.
on top of it. So
Yeah,
it's
if
possible.
I mean, George is making a valid point on the chat, saying like we got big earnings as well, and that is
Yeah,
true.
we
I
do.
mean, this whole week is suspect with loads of events. But if I would be like any trader, and I will anyway, I will keep an eye on quite a few assets when once the Bank of Japan decides what to do. Not only the yen, but even equity markets and stuff, and even perhaps gold and silver. Because that moved down. I thought it was a bit of a stretch at 24.80 in gold, but uh, I think, and silver as well, it's all been part of this get me out of everything against the yen and all the correlation trades and all the hedges, get me out of all of that. And that we've had now, and the positions are much lighter. So um, for yeah, perhaps if they go in full whack, then you can see actually your gold coming down more. But I still want to see it.
You still want to see what?
I
You
still
don't
want
see
to
it.
see them go full gangbusters, and because it is in the developed world, it's your central bank which is um, the least independent, right? They do take care of the government finances and their very low growth and things like that, regardless what inflation does. So it is still your least independent central bank, and they could just underwhelm, again.
Okay. All right. A lot of people were looking for WTI to have a bigger day with the potential escalation of another front
Yeah, I mean,
between Israel and
Lebanon.
Hezbollah, which would take them into Lebanon.
Strange,
Um,
that strange that this thing is actually not being able to bounce at all.
yeah.
Uh,
So it's been that way. They've been blowing up tankers. I
yeah,
think it was Don Durrett last week said, they're blowing up tankers and
but
pipelines and everything,
mm,
and crude can't get going.
no. And look at all the moves, or virtually all the moves that we had since we hit really. Um, Yeah,
84 up here.
80, that 84, yeah. But even before, yeah, I mean, all this violent move down from 87, 90 bucks down to 70s. It's crazy the moves that we have in 2024. It's not holding at all.
Yeah, I think it speaks to global economic growth.
Yeah,
So there could be other parts of the world that fall into recession before the U.S., right? Doesn't have
right.
to all, just
Mm,
like markets can peak
yeah,
and bottom at different
yeah,
times, so could
mm,
economies
yeah,
go into a different type of economies at
yeah.
different times. So there it is. I know people talking 60. So,
Oh,
um,
if we broke 60, I mean that would be there's a major support coming up in the low, I think it's low 70s if I'm not mistaken. I'm gonna have to pull it up now. So,
yeah, go
and
ahead.
good
So
morning,
here,
guys.
this is the line. I've had it for so long, I didn't extend it. But
Yeah, I've mine looks a little bit different. Mine comes in around 60, 64, right around there. So,
yeah,
yeah.
yeah, okay,
Major support down there. I mean, the like if that breaks, could you imagine? I mean, it'd look like copper.
yeah. Go ahead, buddy.
So how you guys doing this morning? Did you guys have a nice weekend?
Too short.
Yeah, I just
Yeah,
woke up
nice,
early, like
nice and
3.
relaxing. I have a leaky condenser, and I'm trying to figure out how to get to it. So it's one of those one of those situations where I'm not an AC guy, but I know exactly what's wrong, and it's like I think I'm gonna have to dig through my wall, which is not fun to find the leak. Yeah, that's what I've been dealing with this weekend. It's always something when it's 1,000 degrees out over here, Dale.
Yeah.
So
Yeah.
hey, good morning, everybody. And this is what I was looking at for as far as crude goes. I mean, this is like one of those we start getting in the mid 60s and things get a little,
Yeah.
but there's a lot of room between here and there. I mean, it
Yeah.
just there is. I mean, there's a lot of levels to play around. But you know, looking at copper, you were talking about global growth. I mean, copper is finding some support at the 200 DMA, but you know, what is the you just take copper and crude and you know put the two together and it probably paints not the brightest picture in the markets. But I wanted to point out that that the euro dollar is at the 200 DMA. We've reached the 200 DMA and the 50 DMA, which is really right in the middle of the triangle. But as KMan, you were pointing out in the chat room, it is the it is corporate month end. We have you know, some dollar buying coming in. But if you look at like the month end, what the market's expecting, you know, some, you know, little bit of dollar selling, but mostly through the dollar yen. That's the reading that I picked up that was mostly going to be dollar yen selling in the month end. So this corporate month end, do you think that's what's pushing the euro down towards these levels right now?
Yeah, does look like it, and also global. It's like something is yeah. I think the euro has been sold because you look at the euro. Some of the euro crosses are on the defensive as well. I think there was a round of sterling selling as well. And also, by the way, also this afternoon we will have UK Chancellor Reeves talking in about an hour and a half or so, and she's probably going to paint a pretty dire picture of the UK situation. So you may see a bit of an extra dip there on the sterling, but it's she may be painting a picture which is too dark versus the reality. So yeah, sterling could be a bit of a mover as well this afternoon. But yeah, for the rest, month end as such, take away the US corporate, I don't see much happening apart from a bit of yen, as you say, perhaps because the Nikkei has been dropping over the course of the month. But yeah, for the rest, it's very balanced really between different equity markets.
You know,
Bond market,
just go
and the
ahead.
bond market is still big one soup, you know. US yields are coming down, but the rest is coming down in the same way. So
Yeah, you mentioned that a little bit earlier. I mean, you look at yields just across the board. This is a good
yeah,
view of what it looks like. I mean, you got, you know, yields literally so on so many different countries are all down. I mean, this is a really just a view of yields, and you can see it's just red across the board, which I find, you know, pretty interesting. You know, one of the things I want to talk about this because this is I spent 10 minutes on a 40-minute week ahead video talking about how I'm going to trade the yen this week. And I want to discuss it with you guys because you know, putting all the pieces together, not only do we have the BOJ and the FOMC, but the BOJ happens just about 12 hours before well, like maybe 9 hours, depending on when the BOJ announces. It's going to be, you know, between, you know, 9 and 10 hours away, or 9 and 12 hours away from the FOMC decision. And you know, the US dollar Japanese yen is bouncing off the 152 level, obviously, and that was big support. I think a lot of us played it off of those levels last week. Dale, as you pointed out, up at 157, and you were right when you were saying this, and I have to say I was impressed that you did that freehand without drawing out the fibs. It was the 50% retracements at 157. The 38% retracement is at 155.80, and that's ultimately where I want to be on the short side of the US dollar Japanese yen, ultimately, because I feel that the dollar is going to be sold this week. after we, get through the Fed. But I want to, express that through the US dollar Japanese yen. So what I'm looking to do is sell a little bit of a rally above 155 and for an eventual breakdown of 152, hoping that the BOJ gives us a little bit of a gift. Now, as KMan, you were pointing out, that may not necessarily be the case because of some political pressures that the BOJ might be feeling, but I'm going to try to trade the opposite direction until proven otherwise. In other words, and if it gets above 156, I just don't want to be on the short side of the US dollar Japanese yen anymore. But that's how I'm going to try to play it into the BOJ. And like I said, I expressed that during the week ahead video, talked a lot about how I wanted to do that. How are you going to play the between these two central banks, or are you just going to stand aside?
I'm more going to have a reaction than trying to step in front of anything. I really want to see what they do, because it's going to move. Whatever happens, right? It's going to move. Whether we break 152 is the question. If they go full gangbusters, like let's do 15 or even 20 BPs hike and cut the bond buying in half, like really send a very strong signal, I think 152 will be toast. But it's if they don't give us everything, which is really, is it going to bring us back to where we were 3 weeks ago? And because it had such a big impact on all assets, what they did when getting out of the yen positions, that it's the positions must be very light right now. And I'm a bit afraid that some of the speculators or the asset managers also, if they don't deliver what is expected, at least, that they could go completely the other way around again. I don't think that we are trading back at 162 so fast, but I wouldn't be surprised if we find it back at 158 if they underwhelm.
Yeah, I mean, and that's the thing. Like I feel I know my risk pretty well on a rally up to 155. Get above 156, you're right. We're probably going to trade back to 158. I mean, that's just, it's and as a trader, what we can do, and the most we can do, is identify where our risk is. Yeah, like, I can't control what the BOJ is going to do. I can't control what the Ministry of Finance is going to do, nor the Fed. What I can control is where I'm willing to take a stab at the market and knowing where my risk is at. And if I get stopped out, I get stopped out, because that's life. And as a trader, if you don't think you're going to get stopped out and you're not going to lose money probably about 50% of the time, you're wrong, because you're just not that good.
It would be like a boxer, Blake. It'd be like a boxer stepping into the ring and not expecting to take hits.
Yeah. That's a great analogy, Dale. That's a wonderful analogy, actually. And that's the thing. It's like, I know where I'm wrong, and so I'm willing to take. I try to get in ahead of what I think is going to happen, and I try to get a running start, basically. And so that's why I am going to be looking. Now, I don't know if we're going to see if we're going to even get a look above 155 this week. I'm hoping that we do, because I want to sell it. I want to sell it ahead of the BOJ, which happens to be tomorrow night, actually, Wednesday morning, and
so maybe it's the BOJ that drives it there.
I'm wondering.
People are disappointed.
It could, yeah, it could be. Really could be. And if it is, I'll be there waiting. On a move to 155 and change. I'll be up there probably selling some. Hey, I wanted to have another discussion really quick. I want to talk about equities, because Dale, I don't know, and I don't know about you guys. Unfortunately for my wife, one of the things that I enjoy to do over the weekend is I like to, watch, different analysis and see what everybody's thinking. And I'll tell you this much. Everybody's bearish right now. Everybody's bearish. And I don't know, everybody believes that a top is in. Everybody believes that that we're going to crash. I mean, that's just all the headlines that I see.
Really?
What's that?
Really? Everyone?
Yeah. Oh my God, nonstop. Like way more than half. Let me just put it that.
Anyone you respect?
Yeah, actually. Yes, actually. So
All right.
but here's the thing. I want to say, I'm just going to say this, and let me delete this really fast. We only pulled back a 38%
5%.
retracement of the last leg higher. Not even, you're not, talking like the big broad-based move. I'm just talking the last leg. 38% retracement. We hit the 200 DMA. We couldn't even hold below the 50 DMA, and we bounced right back above it where we are at today. And I mean, yeah, I know we're below this channel, support. And I think this week is going to be the inflection point week. Like, what happens when we get back around, let's just call it 55.50? That's where the rubber is going to meet the road. But I just felt like an overwhelming sense of we are crashing, type of analysis over the weekend. And so with that being said, I don't know how bearish I am. I mean, again, 38% retracement, very manageable, small pullback. We got what was it from the highs, Dale? What was the most we peeled off from the S&P? We were down 5%. Yeah. 5%. I mean, and we're in an election year, and I have seen and heard arguments that it doesn't really matter who is elected this year. Either a Harris presidency or a Trump presidency is going to be good.
Well, you know what I heard when it comes to that? It doesn't matter who's flying the plane if you're going to either hit the left or the right side of the mountain.
There you go. And I believe, and I think you're right. I think after November, it's going to be a completely different market. But going up into, November, it's like how much selling is going to take place. And I don't know. I just put it this way. We might be forming some sort of top, maybe, but I'm going to need some proof. And proof to me is break below 5,400, break last week's lows, and I'm going to get kind of bearish. But until then, I'm not quite there yet.
Not willing to sell like 61.8 retrace.
What's that?
Not willing to sell. I'm looking to sell 650 to 61.8 retraces, not
of
in
this
S&Ps,
move,
but in NASDAQ 100.
Yeah, well, that's pretty
That's
ballsy,
the one I
Dale.
identified. I identified that as where the weakness was going to be. Everyone thought it wouldn't happen because the Russell was going to hold them up. And I said, what led the market up will lead the market down, and that's the Mag 7.
Yeah,
but I'd love a rally to sell.
But out of the Mag 7, how many are reporting this week? We have Microsoft.
A lot of them.
Yeah, we got Apple, we got Amazon, we got Meta. I mean,
yeah, take it back to 20,000. That's a 900-point rally from here. So, sure, I hope their earnings are great.
Yeah,
I mean, I could get my shorts off.
Yeah, well, you can take your shorts off. Just don't do it while don't put the video camera on.
All right. Well, you know what? I do anyway. During interviews, you only see the top.
We don't need to know that. We don't need to know that. And your guest that's coming in today.
I thought you were curious, so I sorry about the mystery, but
yeah, no, but look,
Hey, guys, it's face show, not the other side of the body.
Yeah, it's not.
The
that's
bud
right.
show?
Yeah, that's right. We don't need that. All right. Hey, so here's I want to ask you guys, KMan, since we got just about a minute. Give me one idea, KMan, not 10. One idea. What are you looking at today? What are you looking to trade today?
Wow. Buy dollar rand dips.
Buy dollar rand dips. Okay. Woo, that was one. All right. Very good. So buy dollar rand. That's like looks a little punchy today. How about you, Dale? One idea, not 10, just one.
I'm short gold.
Oh, you're short gold. That's right. I heard you say that a little bit earlier.
Stops over the high of the day now.
You can't even you're so bearish you can't even see straight.
What is up?
Yeah, I mean,
oh yeah. I'm just into gravity for a little while, into August.
Yeah. Hey, look,
Gravity.
just so everybody can see this, I mean, we bounced, we hit a 38% retracement, and I would say while it's below 2,400, it's not a bad idea.
2240. 2240 is my target to bring your wheelbarrow and your pick and fill it up with all that ore and go home and watch
I'll be in it before.
watch all drama unfold on TV.
All right.
I'll be in it before.
Huh?
Hey guys, I'm just gonna say, watch the euro at the 250 DMA at as KMan pointed out at corporate month end. I believe that we are developing a bull flag pattern, and you know, these are the levels you want to be on the long side ahead of this week's Fed. And I want to also point out that this week we have a crap ton of stuff coming out. Today, as I mentioned in the week ahead video, if you wanted to take a day off, today was the day to do it. I know a lot of you are here, but tomorrow we have jolts, consumer confidence. We have Aussie CPI and retail sales. You know, less than 12 hours after that, we got the BOJ, we got the Fed, we got Eurozone CPI, we got the FOMC, we got Bank of England, and then we got non-farm payroll that we'll be covering live right here on Friday. We got the Gelber Group that's going to be on the F.A.C.E show exactly 3 days from right now. They're going to talk about how you can win up to $40,000 in cash with no strings attached, other than you have to be a U.S. resident. But they're a real prop trading group here in the United States. You would probably recognize Mr. Gelber from Brian Gelber from the Market Wizards, original Market Wizards book, from Jack Schwager. He's ran this prop firm for about 25 years. So you guys are going to meet some of the traders from there on Thursday. And we got a crap ton of earnings that we'll be covering throughout the course of the week.
And the NFP Friday. I mean, it's
yeah,
I'm telling you,
take your
vitamins. Take your vitamins.
Hell of a week this week, and we're glad that you're here. And remember, this is the last week, last couple of days, because the first is on Thursday. If you take a trader funding program assessment, you'll have a one-on-one consultation with me. I'll show you all the, kind of tools that you have with ForexAnalytix, but more importantly, I'll give you some of the some of the ideas that I use to pass an assessment, and maybe that'll help you along your way a little bit quicker. So, with that being said, Dale, I know you have an interview, so I want to thank everybody for being here today. And KMan, way to hold down the flow show with Ryan absent this week. So good job.
I got help the first part of the week. Yeah, we got our headmaster surfer of the waves.
Oh, nice. Yeah, the Wizard of Waves was with you today.
Yep, and he brought he brought his longboard, so there's a lot of surfing to do.
Nice.
Hey guys,
all right.
I have a trader's prayer for us this week. God, thanks for giving me the patience and grace to be there to trade the retrace.
Good one. Have a good
Amen.
Amen, everybody. Have the patience to trade the retrace. I didn't say which direction on the retrace. You're going to have to figure that out. Or join ForexAnalytix already, you guys. We're kicking ass. Anyway, George, you're here. So why don't we get going? Thanks a lot to KMan. Blake, nice looks today. It's gonna be fun working with just you two guys. Maybe Stell will drop in, and
I think we'll get a few visitors this week.
Maybe
so
Steve
thanks, Dale.
Making a special appearance. Come back after all this time. Steve reemerging. Come back, Steve. Steve, come back.
He's in Rhodes this week. He's in Rhodes this week and next week. Yeah. So.
Okay. So George wants to use the camera. So I could accommodate you. Huh? This is like your chance to be on TV.
So yeah.
Right?
Yeah, absolutely.
All right, buddy. George, welcome back.
It's always a great compliment to be on this show. Always learn a lot, and I think I should be regularly following this show, at least while we're in this dearth of any sort of real macroeconomics or monetary economics. Terrific, terrific
I wanted to
presentation.
ask you about a few things. And I know, I've read your stuff. Last time you were right to be sanguine about the market. We had a continued melt up. Bonds have not performed badly. Even when there was risk off, they kind of held together. And to me, is the refunding package an important thing for us to consider as far as supply coming into the market? Does that affect your narrative at all, George?
It doesn't affect my narrative, but it is very important, but only because 90% of the folks think it's important. So who am I to debate what sentiment is for the mass?
Okay.
But as far as macro or even monetary economics, it's of little importance.
Okay.
In the end, U.S. Treasuries will be set by NGDP.
By what?
Nominal GDP.
Nominal GDP.
Yeah.
Okay, so and that was 2.8 last week, right?
I'm sorry?
And that was 2.8 last week. We got the
Yeah,
GDP. Was
2.8
that
real.
nominal?
Yeah, that was real.
Oh,
And then you
okay.
got to add the inflation on it, and it got up to about 5.2. What's remarkable about nominal GDP, and of course, corporate earnings are paid nominal, everything's paid nominal, so
Right.
it's sort of a head scratcher why people pay so much attention to real, is that how steady it's been since the COVID fiscal spend kicked in 2020. Now, it was higher for a year or so, but we've been cruising along at 5 to 6.5%. And it is starting to drop a little bit, but with no drama, and easily explained by the amount of fiscal spend and the lack of any monetary presence.
When I think of things in nominal terms, for me, I think of them in dollar terms. And
That's exactly, yep.
and I'm a currency trader. And
Yep.
I think that we're at a very important inflection point in the dollar, George.
Mm-hmm.
And I'm thinking that a lot of people looking for a higher dollar. Before the Trump situation and their policy about wanting to weaken the dollar, I was already on that narrative. I think we could go to 105, but I think there's a possibility we have a big breakdown in the dollar, which is going to change nominally, right? Everything. A weaker dollar is going to make almost everything worth more nominally, correct?
Absolutely, and I think there might be limits to that because I see the dollar as an administrated rate. I do think, well, it's 20 people. G20 gets together and says, look, we just can't have the euro at 99 as it was in the fall of 22. We got to have it up to 108, 109 because you're just killing our trade. So sure enough, the euro goes up to 108, 109. And I think it's, if just look at that chart, I think it's been an administrated rate since.
It's been
And
pretty range bound, George. You think
yeah,
that the
yes.
G20 could keep the euro confined to
Well,
this
I
range?
think
That
it's at the request of G20, but I think it's just whatever the hell the United States wants. Um, I have a very sort of power crazed view on what the U.S. can and can't do. And they're willing and they're able to just keep the euro at whatever best suits the U.S. in terms of its alliances and the dollar block to carry on. Right now,
okay.
I think what's going on is that they got Japan cheapening up, sort of like a bit of a reversal of the Plaza Accord, where they're moving yen up to 150, 160, maybe back down to 140. But
That
that
could
is,
happen.
yep, that's a counter to RMB and China. They're trying to give China, give them some gears. They're There's promoting Japan now in that block, also probably Korea to some degree. And they're trying to take the wind out of the sails of China. And I think that's really what Trump is saying when he wants to devalue. It's not so much versus the euro, it's versus the RMB. And I think the ultimate goal is to get the RMB down to 4, 3.5, something like that, just as they did to yen in the late 70s, early 80s in terms of the Plaza Accord.
And how do they, I've asked this question to guys who follow the Fed, to other people that, are commentators. And, the Plaza Accord was one way to do it. Can they do it just by jawboning? How does the executive branch and the Treasury get what they want as far as direction in the dollar? What are their powers to bring down the dollar so that we could, have the export advantage like Vance is talking about, and tariffs like Trump is talking about?
Well, I think it first has to be decided that this free trade is for the birds, that we've had this experiment ever since China entered the World Trade Organization, 2000, and it's done nothing for the U.S. and it's done a hell of a lot for China. I guess it's sort of helped out the U.S. security because we didn't need 2 more aircraft carrier task force out there in the South Pacific to
For a
while.
Yeah,
For a while. But I think it's just too costly in terms of how it's hollowed out the Midwest. This is what Vance is speaking to.
Right.
Jobs, it used to be that you towed the line and did your job. You got a bass boat and a nice house and 3 weeks vacation. That's no more. Now you got to hold 3 jobs and hang out. Why? Because China's allowed to just flood Walmart and Amazon with cheap goods. And why wouldn't China do that if the U.S. would allow it under this free trade? So this whole idea of the currency is first requires that the free trade thesis has to be tossed. And I think that's what we're going through right now. And I think that's
well, didn't that start with the Trump tariffs years ago?
Absolutely.
That was the beginning.
And the Biden administration realized that that probably was not a fight worth having. Anyway, it obviously was picking up some economic points. So Biden just did more. Now he not as terms of a counter, but he said, okay, if we're going to have more jobs because we're going to via tariffs, then what we're going to do is flood the country with a fresh crop of workers, and I think that's what's going on with the illegal immigration to the U.S.
Okay, so because of the poor demographics, or because of their potential being a voting bloc? Do you believe, a lot of these conspiracy people say that these millions of illegal immigrants that have sought sanctuary here, that they can vote? Do you believe that they can vote?
I think they are going to. Whether they're going to do it on the up and up or just in shady boxes being stuffed right now remains to be seen. And I don't know if that's really a bad thing for the U.S. because there's an idea that the Democrats are going to be able to control this bloc and stuff them into like these urban hellholes, and direct them to vote Democrat because of the perks that they get by just hanging out. Now, that's a very crass, but that is sort of been the history for New York City and L.A. Watts and Chicago, South Side. What I think is going to happen is that if I'm a guy from Nigeria and I just spent and borrowed and begged every last cent I have to hit a boat and somehow get to Mexico and then walk like 2,000 miles and then go through, have a 10% mortality rate with my fellow peers making this trek. I don't know if it's clear that I'm going to sign up for this plan to get into the urban control. I I think these guys are going to end up as Republicans, or at least conservative. That being said, I think that's the way the Democrats hope to offset the political enhancement that the drop in that the raise in tariffs will give the Republicans. It's definitely political. I think it's short-sighted on both parties. But the central theme here is that free trade is being tossed out the window.
Okay, so free trade has been really kind of the wheelhouse for this prolific bull market that started in 1982, which wasn't that before NAFTA? And the World Trade Organization, a lot of the treaties there letting China in. So if we're going the other way, are you still sanguine that things like NASDAQ, especially high tech and the valuations, that it's still clear sailing here in NASDAQ and S&Ps?
Oh, I definitely think so. I sort of like maybe flippantly, but I sort of sincerely said 6,000 on the S&P 500.
Okay.
This is you know, in Q4 of last year, and that's what's happening. I'm certainly on track as far as chronology goes. And I think what's
would any price level, George, change your forecast? Say, for example, we tried to rally and weren't able to make a new high, and then we take out this 5,400 level, which I think is big, technically. We take that out, it'd be pretty negative looking.
Well, I have two thoughts on that. Is that, first of all, right now, my views have worked out, but they're views in terms of like, 2 to 3 quarters of the go. And there's a lot of time between the beginning and the end of like figuring out whether I was right or wrong.
Okay.
And this is because the Federal Reserve is no longer having a reaction function. There's no settling out every FOMC or every week in terms of whether the data was here or there. They've put it all into forward space, like 2 years down the road, 3 years down the road. So that means any meme, any sort of popular sentiment that claims macro or monetary understanding can be tabled. And I think that's the spiel that you alluded to, with the idea that Yellen is somehow, by supply and demand, fixing interest rates. I think it's hooey. What I think it is that there's a massive vacuum in terms of actual ongoing data, in terms of now, that is saying you're wrong, this guy's right, and drive on. So that means that the technicals is probably, this is about the glory days of technical analysis, because there has to be something that fills this vacuum of lack of understanding, of just bullshit.
Speaking of vacuums, George, the bond market was the deepest besides currencies. And there are days, TLT, which is a pretty good proxy. Look how we're just gapping around, and there's little dots, and there's no liquidity here, George. I mean, I think they're going to drive a bear market rally. They look good, but what's the problem here? I remember when I would pull up a chart like this, it would be a bulletin board stock, and my expression would be, this is a stock you have to make an appointment with to do a trade.
And then if you did make money in the pink sheets, the SEC would come knocking in about 3 months.
Anyway, look, we have dots in the most liquid market out there. But it does look like to me, the path of least resistance is lower rates. I can make a case for 3%. Now, is it 3% and everything's going to explode, or is it 3% and maybe risk realizes that rates might be coming down because we're entering a soft patch?
My view, and this is based on 30-odd years of experience prior to
3%.
Prior to QE and all that stuff, a decade ago. Is that U.S. Treasury 10 years especially will always price to the waxing and waning of the U.S. economy. If the economy is going to, is thought to be maintaining a 5.5%, then, another 20, 30 basis points for injury, for volatility and risk, that means U.S. Treasury 10 years will see 6%. If the U.S. economy is going to hit the dump, is going to be dumped, and it's going to go down to 3%, then you're right. I think U.S. Treasury 10 years will go down. Now, the 10 years is liquid. I think the Fed's coming in and out, and I think the Fed's the dominant player still in the 10 years. Your 20 years, I think, is more telling. It is the pink sheets. It is a liquid. It is not liquid. It's an administrated market. Just like foreign exchange, I think a bunch of bright guys at the Fed, for various, I think, mistaken theses, have gotten together and say, we're not only going to run Fed funds, we're going to run the whole curve right out the 10 years now. And so even though they're selling with QT supposedly, demand supply doesn't impact. What they do is they just set the rate. They say, we'll sell, but it's going to be at 4.25. And the guys will say, yeah, but it's worth like 5%. And they say, no, we'll sell. And if you want to be, called, it'll be 4.25. And I think that's what's going on right now. It's an administrated rate. If you look at other rates, 30-year mortgages are right now going back towards 7%. They went down as low as 6.75, but they're back up to 6.78. All rates that do not have this oversight from the Fed are indicative of what's going on in the economy. So if you take a look at 30-year mortgages, which when you get into mortgage-backed securities is just behind treasuries in terms of liquidity and importance, that is clearly reflecting a different story than what you're seeing in U.S. treasuries. The curve is positive. The term premium is positive, and not only that, the outright level for roughly 10 years equivalency is approaching 7% again. It got as high as 7.75 in that ruckus we had last year this time. So I wouldn't be surprised from a macro and just in terms of flow that once the Fed gives this up, and I think they will give it up, I don't see how they can keep going like they are, then we're going to see toward a 6% in the U.S. Treasury 10-year. Bull call, but as I said, I take a quarter-to-quarter point of view, and I don't have to I don't have to be responsible for what happens week to week. So that gives
You're
me
looking for 6%. You're looking for
yes, 6%.
Okay.
Yeah.
Could we have 3 first and 6 later?
Oh, absolutely. But I don't
Okay, well,
think
that's
so.
what's going to happen.
Yeah, because that's a function of Fed's interaction with the market, and as their required reserve levels for the system bank become stabilized, they have less and less excuse to come into the market. So to get to 3%, I think the Fed has to have a big excuse to come into the market, just from a flow point of view.
What are they going to do this week? Nothing?
I think they're going to cut.
This week. Okay.
Yeah, I've been saying this for a couple of weeks now. Of course, I've been saying this like 2 months ago. But anyway, and I was wrong for the previous FOMC. But the FOMC, the Fed, in terms of the actual rubber hitting the road, in terms of flow of funds, has been remarkably ineffective and not present in terms of what's going on in the economy. It's a hell of a story, and it's a hell of a focus, and everyone said,
are they behind the curve, George?
They're not even in the curve. They're in some sort of fantasy theory on how monetary policy should be conducted, which has been proven since about 2012, 2014, is not working. This is called neo-Wixell, and this is like 3-hour babble right there, Dale.
Yeah. Okay.
And because it's not
then
working,
let me ask you about something that might be, another guy who I respect. He was chairman of the CME for many years. His last name's Duffy. I think it's, I don't know if it's Terry Duffy, but he was talking about that the U.S. was going to transfer clearing of treasury transactions to the UK.
Mhm.
that it was going to be a UK clearing firm. What the heck is that all about?
I think it is transparency is the key word there. UK, I don't know. They just I guess with Globex and stuff, they have more experience and they had a lower bid.
Well,
I
I mean, look, they have a track record. They had the gilt crisis a year ago. Do
right.
we want
I
to cede that type of authority to the UK?
No, I think it's a very bad idea, and I think it actually should be in the auspices of the Fed or the FDIC or
Or
one of those
Pinkert?
bodies.
Why don't they ask
Yeah,
us, George? Huh? What
absolutely.
they should ask us. It's easy. Man on the street
But
would say, "Go ahead."
but what's important with all that is that transparency has been forced upon a few big players, if not one big player, such that they can't game the U.S. Treasuries as they did last year. There's no longer. I don't know if you recollect Paul Mosier at Salomon Brothers in the late '80s. He ended up in jail, but that is now like that, or was like that times 10. And was like when a big player came in and decided, I think we're going to range bound the U.S. Treasuries, not in terms of 4.25 to 3. We're going to do it from 4 to 5. Why? Because that maximizes our options that we're trading on the SIBO. That being the case, they just ran roughshod on it, and Gensler came out and insisted on transparency, and they no longer can do so. So instead of driving it down to 3 7/8 or up to 5, they now can only do 4.25 to 4.5, 4 5/8. So that ability to game the market has been taken away. And I think, therefore, the realities of how U.S. Treasury 10 years are priced will come about.
Okay, I don't know. Ceding that power to the UK, they have their own
Uh,
issues.
it's goofy.
They have their own issues. George,
It's
I
very
wanted to
goofy.
show where people could keep up with you. Look at this. The guy does white papers.
Nah,
Okay.
well, I
Oh,
guess I
Lynn
do,
Alden.
but
So
yeah,
I know
we've done
Andy. I
we've done
know
a few
these
papers.
people. Yeah.
Yeah, I have great respect for Lynn. I have great respect for Andy as a trader. He did a terrific job at Solly and Later City, and but I completely disagree with all his framing right now. In fact, I think he got pissed off at me. I use him as sort of a good example of what's wrong in terms of analysis these days, and
Oh,
that's what
okay. Yeah.
that white paper does.
Well, come on, you can't take yourself that seriously. Anyway, George, people can follow you on X at Bicker
Mhm.
and Brattle.
Bicker and Brattle. Yep.
And
Robbie
the
Burns' poem about the mouse.
okay, and here's your Substack here, the Monetary Frontier dot
That's right.
Substack.
Really
Okay.
appreciate you showing this, Dale. Yep.
Okay, so clear sailing with the stock market to 6,000. You think we get there before the election?
I think a very good possibility. I could see like Kamala panicking. I think that's why the Fed's going to cut this week, is because they need a boost in the arm. I see the Fed as nothing but a political animal now, and it'll do whatever it takes to get Kamala or whoever. Well, I guess it is Kamala into the White House.
Okay, so you're certain there will be an election.
Well, I'm off to my homeland in Cape Breton if it's not. So yeah, I'm out of
Okay.
here.
Okay, I'm wondering where will it really be decided, George? The Congress, the Supreme Court,
Uh, it
or the
might end up in Supreme
streets?
Court. We might have a repeat of Gore versus Bush. Um,
You know
this
what the difference is?
What's that?
There's not an Al Gore in this race. That
That is
would
true.
step aside for the good of the country.
I think that's very true, and I think as
So
long as we end up with this 50-50 split, we're in rough shape. One
yeah,
party or the other has to figure out how to get 60% of the electorate. and stop this this corruption of, like, you know, I got 50.5, you got 50, you know, 49.5, and which just is, it's just not working.
I hope long term you're right, and 6,100 is only 5% away from where we
Yeah.
were.
Yeah,
So
no,
I don't know. Is it worth going for the last 5%? What if it
well,
doesn't get there?
I think the macro setting insists on it. And I think what's
Okay.
the real fun discussion I have is that if we get to 6,000, fear will be forgotten and greed will kick in,
And we'll go
and
to
then we'll get into
7.
all sorts. Who knows where we go? That we're getting into Minsky territory and the makings for a bubble. Right now, we don't have a bubble,
Okay.
but I think we could end up with that.
All right, George. So
Very
there's
good.
time to keep uncorking the champagne bottles. George Robertson. Follow him,
All right.
guys. He's not afraid, and you know what? He doesn't get angry when people disagree with him, as you can tell. He just believes in what he sees. So, George, I
I just
appreciate being able to have a conversation with you every quarter or so.
Oh, I see. I seem to be. I look forward to the next one, maybe sooner, if things come about as I say. But in the meantime, this is the golden day of technical analysis. This is you guys rule the roost, and all those
Okay.
guys who talk about, like, activist treasury intrusion or whatever they call it, and various other memes and secret sauce theories that are supposedly macro monetary are really cloaks for people not knowing what the hell's going on. And so they can't just accept the fact that they're technical traders now. They have to have a more substantial reason for what they're doing. But in
Yeah.
the end, right now is just the glory days of technical analysis. It works.
And it
It's the only
is
way.
like there was nothing fundamental that said gold would peak here, but I did
Absolutely.
have this line in here for
Yep. For the
weeks
market you did,
prior
yes.
to it getting there.
Yes.
So, you
And
know what? It still amazes me, even
yeah.
though I've seen it happen again and again. It's still, wow, I could draw a line and the market gets there and there's a reaction to it. It's just a line, you know?
Well, I think Dale, what you got going on here is that this line is the market now. It's there's a lot of people. It's common sense. I mean, look why you put the line there.
Yeah.
And they don't have any monetary economics to work with now. They got bullshit. They don't have any macro economics. They don't like that either.
Yeah.
They just want memes and, like, secret sauce, recipes.
And
This
algos.
is and
And
algos.
algos.
This is
Yeah.
what's running the market right now.
Okay. Well, good to be a master of the universe. For every once in a while, it feels like that till I get humbled.
For now,
So,
enjoy it, Dale. Enjoy it, Dale, because we're going to get back. The Fed is going to come back, probably in a panic, and
yeah,
all the old stuff is going to reappear, and there's going to be a bunch of characters who are babbling away about week to week macro and
yeah.
monetary.
And
So enjoy it while it lasts.
Paul gave Generation Xers bad advice when he started his tightening regime. He told them not to consider buying a house now, that he would
Right,
wait a little while. So
right.
obviously he thought that his tightening regime was going to bring down real estate prices. It's only exacerbated it. And now they're
Yep.
going to ease and there'll be more activity.
Yeah, I think this Fed is, at some point they have to face honesty. They're not, all they are is
You want to
babbling
end the
away.
Fed, George?
No, I think the Fed is crucial for America. I'm
Okay.
a huge Fed fan.
All right.
It's just not this Fed.
Not this Fed. So next
Yeah.
time we won't get a lawyer.
or
Anyway,
a
we'll
13-year
put
Carlisle guy.
we'll put in I'm sure uh should President Trump win, he'll put in an Arthur Burns type.
I I think he will. I think what's actually going to happen is, if we do get this mania bubble, and I think there's good possibilities for it, and then we get crushed, which characters like you will pick up because this would be a absolute
Yeah.
classic Fibonacci double top, whatever you want to, however you want to talk about it, and it'll get crushed, and you'll be the only guys that get it, just like the Nikkei imploded.
Yeah, but look at
And
this,
then
George, and then I'm going
yeah,
to say goodbye. Before
okay, you
this
got it.
candle happened here at the high of
Mhm.
NASDAQ, before the Mag 7 got crushed, and they got crushed, and they could recover to 20,000. But we were talking about in here, well, maybe we don't have to predict it. All we have to do is wait to see it. And this was a key reversal that was never negated for weeks and weeks and weeks. And I'm selling rallies. Okay.
Mhm.
So, everyone thinks it's clear sailing through the elections. My sister said, Dale, I'm going to get out at the end of October and get back in right after the election. And I say we're going to have a little summer summer scare in the markets. That's where
I
I'm
think
at.
you're right on. An interesting chart, and I'm not gonna go on for another 10 minutes, but an interesting chart. Put JP Morgan up. And I think this is like the core reality of what's going on in the
You
economy.
like it? I was reading. You like JPM, right?
It's not so much like it's just that I like the economy,
Okay.
and I see no reason why it's going to abate. And so J.P. Morgan is the economy. They toned down all their crazy stuff, all their tradings. We're brighter than other guys. Jamie Dimon says no more of that. They got rid of all the mortgage crap. They just are the bank for the nation, and I think their price reflects it.
Jamie Dimon wants a job in the Trump administration.
I think
He'll be
if they're
his
not,
Robert Rubin.
I think he told them forget it, and
Oh, did he?
I think I suspect, and I'd like to see him as a VP under Kamala Harris, or even Secretary Treasurer under, just like all the Goldman guys
Well,
did.
here's your warning on JPM. I'm not saying it won't make a new high, but this
Mhm.
is a weekly chart. This was a
Yes,
confirmed high.
yeah.
This high momentum did not confirm. The third high, which is sharply higher, we still haven't even taken out the peak of this high. You have classic non-confirmations on JP Morgan. I'll buy it at 170.
Okay, you got me nervous. I'll have to watch this a lot more
All right.
closely.
Well, you know what? If we start closing back under 200,
Mhm.
204 or something, get out of the way.
Okay, will do, and I
All
I
right, buddy.
appreciate that.
All
Okay,
right.
Dale.
I'd love
Thanks a
to
lot for
add
having me.
value. It was great talking to you. We'll speak in October, buddy.
Okay, sir. Talk soon.
My trading warrior brother, George Robertson. Thank you.
Bye-bye.
Thank you, George. Good hunting, buddy. They're all thanking you. Don't just count your pips, count your blessings, everyone. See you for Turnaround Tuesday.